What's going on, my fellow wealth creators? Matty Guys here. Welcome to another training. Today, we are going to have a serious conversation. This might actually be one of the most important videos I ever put on my channel, and it might very well be one of the most important videos that you ever watch about life insurance. Here's why. I am going to share with you a real story about a real client that I am working with right now at the time of this recording. This literally happened just a couple of days ago. That should serve as a very powerful reminder and wake-up call in general about why it is so important to get life insurance when you're in good health and preferably as young as possible. Because if you don't and something happens to you, you might not ever be able to get life insurance in the future. At the very least, it will be extremely difficult, if not and or very expensive as well, if you don't take care of it now. And here's the thing, guys, is if you're on a budget, think maybe you can't afford it. Number one, I'm going to challenge you on that because most people can find $50, $100, $150 a month that they are spending on absolute garbage that they don't need, that they could be using to fund a life insurance policy to protect their family. That's number one. Number two, you don't have to start out with a ton of coverage. Maybe you need a certain amount of coverage, but again, you're on a budget. I totally get it. I've been there. But start with something. At least lock in your insurability. Because here's the thing, guys. Anything can happen at any time. That actually might be one of the biggest lessons of the story that I'm going to tell you about with my client, is that anything can happen at any time. That's exactly what happened to my client the other day. Totally unexpected. And so you don't have to get all the coverage you think you need. If you're interested in the infinite banking concept, you don't have to start with a whole life insurance policy right now. You could get a convertible term policy, which is very inexpensive, 30, 50, $100 a month you could start with. You could eventually convert that policy in the term life into a whole life policy, do the infinite banking concept, whatever you want. You could get additional policies later on. But I'm sorry, there's just no excuse why you should not have any life insurance right now. You need to lock in your insurability now, because anything can happen at any time, as the story I'm about to tell you will prove. I'm also going to tell you why this is so important to do as early as possible when you're in good health, based on a personal story for me right now that I'm dealing with a family member at the moment, where a life insurance policy would be extremely beneficial right now. Doesn't have it. And it's a shame because, especially with whole life, like people think that you have to pay into a whole life policy your entire life. You don't. You could pay into it for 10 years, 20 years, just like a mortgage. You could pay it off, never have another premium payment ever again, but have it be there for your entire life whenever you need it. And it will be there for your loved ones when eventually you pass away. Hopefully you live a long, very healthy, fruitful life. But life happens. It doesn't always turn out that way, does it? So my client, he's 50 years old, doesn't smoke, doesn't drink. Overall, good health, no diabetes, no major medical conditions. He's a little overweight, but he's working on it. Nothing crazy, right? Overall, you would think he's in pretty good health. You wouldn't expect this anyways. So we were setting up a policy for him, very similar to mine, where he wanted to do the infinite banking concept. He has an investment opportunity he wants to take advantage of, but he wants to fund the policy first, use the policy for that investment. Great. Because he originally set up another policy with a different company, different agents, that was not structured properly at all. It was horrible. He almost canceled it, and because he wanted to put the premium payments that he was making in that policy into the new one. Thank God he did not cancel it. We'll talk about that in a second. But I got a text from him the other day, and here's the thing, guys. His medical exam for this policy was 3 days from now, April 15th, 2024. I literally got this the other day. He sent me a text saying that we probably need to do the policy on his wife now. So I called him to get more details, just to figure out what he was talking about. He told me that the other day he was at the park with his family. He was pushing his 3-year-old daughter in her stroller up a hill. All of a sudden, starts experiencing massive chest pain and shortness of breath. We all know what that usually means, what that normally is. So he took a break, Fortunately, it dissipated, it went away, but it came back and happened again the following night. That's when he went to the ER. Sure enough, he needed a stent because he had a 90% blockage in one of his arteries, one of the really bad ones, the Widowmaker one. Meaning, had he not caught it when he did, and maybe there was 100% blockage in 6 months, 12 months, who knows? He may have croaked right there in the park. That's the scary part of it. He had no idea. He also found out that this is actually a pretty common thing among men in his family at 40, 50 years old. So he's really going to have to monitor it now. But I mean, it shook me to my core, like, because anything can happen at any time. We don't know. That's why we hope for the best, prepare for the worst. Thank God he found out when he did, and that they were able to do something about it. Because 50 years old, that's pretty young. And, he's the main breadwinner in the family. And granted, like I said, he does have a policy that he got less than a year ago. Like, imagine if he had kept putting it off, kept making the excuses, like, I'm going to do it next year, I'm going to do it next month, whatever. And then what happened, that 90% blockage, it had enough. And he didn't have the other policy. As the main breadwinner of the family, he would have had zero life insurance. What if he croaked right there in the park, guys? And left nothing to his family? Other than, maybe other assets that he has, but a lot of times they go through probate and the tax to death and stuff. Like, life insurance is the best way to protect your loved ones if something happens to you. And eventually when you pass away, there's just nothing that competes. And when I was on the phone with him, he said, Matt, thank God I did not cancel that other policy, because he almost did. He had another agent in his ear, not the one that set up the policy, but just someone else he was involved with, telling him to cancel the policy. Maybe not necessarily right now, but when you hear it enough times and you're not specific with what you're saying, he was this close to canceling that other policy. So he would have taken a $30,000 hit, because that's how bad the design was on the policy. He would have taken a $30,000 hit. He would have zero life insurance and be unable to get life insurance now, because the policy that we applied for is dead in the water. Not going to happen. We might be able to reapply in a couple of years. We'll see. It's going to be tough. It's certainly going to be a lot more expensive now. But at the end of the day, thank God he has the other policy, because it's not enough for the amount of income that he makes and the lifestyle that the family lives, but it's better than nothing. And they can't take that away from him because he's already approved. So it's just, man, that's the other lesson that I want to point out here before I move on to the next story, is to do your research and really consider who you work with when it comes to these kinds of things, guys. Because the agent that set up his first policy did not listen to him at all. It was a horrible design. I actually did a video on this. I'll link it down below, breaking down his first policy. And granted, the good thing about whole life is that time will bail out a bad design, a poorly designed policy. It's still very frustrating, though. It wasn't anything that he originally wanted. And I think it's because the agent just did not listen, didn't know what he was doing, didn't know really anything about policy design. Maybe, I'm not sure what, not being there, I'm not sure what happened. But my client, he was pissed when he saw my policy, because it's exactly what he wanted. And he almost called up the company. He was going to try and get his money back, whatever. And I told him, listen, based on what I know about you, your financial situation, you can afford the premium payments on this other policy. I know you don't want to. I know it's frustrating, but if you can make the premium payments, it's not worth the $30,000 hit, number one. Number two, eventually it will do good for you. It'll provide that supplemental tax-free retirement income, which is what they originally set it up for. You're going to have access to some cash value eventually, like later on. Like, if you give it enough time, it'll be okay. So if I were in your shoes, I would not cancel it. Thank God he didn't, because, because he wouldn't have anything now. Like, it's just kind of scary to think about. Now, the other story I want to share with you guys is what's going on in my life with my father right now, and how life insurance serves, like, it's life insurance, not death insurance. It's something that I've heard a couple of times. And in this particular example, it's very, very true, because You don't have to pay into a whole life policy for your entire life, but it will be there your entire life, your whole life. You could pay into it for 10 years, 20 years, just like a mortgage, and completely pay it off, never have another premium payment ever again, and still continue to benefit from it. You can utilize it for the infinite making concept like I do if you want. For me, the other thing that it does, in addition to maybe tax-free retirement income, supplemental, that is, living benefits. If something happens to you, you're diagnosed with a chronic, critical, terminal illness. If you can't perform if you can't perform 2 of the daily activities of living, you can get access to a large portion of the death benefit to get the care that you need. So my father is 70 years old, has not set himself up well at all, unfortunately. Basically just lives off of Social Security disability stuff. That's it. Has no life insurance, at least not what we're talking about. I think he might have like a small memorial policy, like final expense policy. But his health is definitely deteriorating. He's falling a lot more. He had a seizure a couple of months ago. Luckily, he didn't crack his head open or anything. He did hit his head, but he landed on his knee and completely fractured it. A few weeks ago, he fell again and broke his wrist in 3 places. These are the kinds of things that can really spiral out of control when you're older, guys. You probably know what I'm talking about. And now he needs rehab therapy. Insurance only covers it for 19 days. What if he needed it for 2 months, 3 months, 6 months? What if he needs in-home care? What about thinking about long-term care? Like, he's going to need help taking care of himself very soon, at some point. And we don't like to think about these things, but because we don't think about them and do something about it, we end up in a position like my father right now, like my family, where, you know, I'm talking to my brother, we're trying to figure out like what we can do long term to address this issue. And I was originally going to try and, you know, I was considering trying to like put a policy together for him to get access to living benefits. I don't think he'll get approved. There's no chance. I guess there's always a chance it's worth trying. But how awesome would it be if my father had set up a policy at my age, 35? Let me put myself in my father's shoes right now, because I have 2 policies. One is going to be paid up in 20 years. One's paid up at 75. Of course, I could do a premium offset. Like, I don't have to pay till I'm 75. But I've set these up at 35 years old. Let's say when I'm 70 years old, that kind of stuff starts happening to me, and all of a sudden I can't perform 2 of the daily activities of living anymore. Well, I can now access a large portion of all of my death benefit and all of my policies to get the care that I need, that I want, in the facilities that I choose, the long-term care that I choose to get, that insurance doesn't cover, that Medicare, Medicaid, Social Security, disability, whatever, won't cover. Because that's all he has is Social Security, disability. That's it. And they're covering 19 days of therapy at the moment. Maybe that's enough. I sure hope so. I think it might be. But what about moving forward? Like, this is a major, major problem that people do not think about until it's too late. What happens when you get older and your body starts to break down? It's going to happen, guys. That's what happens when we get older. But these dividend-paying whole life insurance policies are phenomenal for planning for that kind of stuff because of the living benefits. So I wanted to share this with you guys just to hopefully serve as just a wake-up call, get you to think about this. Take this seriously. Get this done. No more excuses. I don't care what your budget is. I don't care if you don't even have a family yet. If you're not married and don't have kids, that's no excuse. I have 2 policies and I'm not married and don't have kids. I'm probably will in the future. Won't you? I mean, most people plan on having a family at some point. Put the financial foundation in place now while you can. While it's super cheap, you'll get the best rating. And again, start small. You can start small, guys. It's okay. You can get that term policy, eventually convert it later on. Just please get something, lock in your insurability now, before it's too late, before something happens. Hope for the best, prepare for the worst. So anyways, I think I'll go ahead and wrap up there, guys. Just to recap, make sure you get this done early when you're in good health, as young as possible. Really consider who you work with this kind of stuff. Make sure they are in alignment with you and your goals. They understand your goals. They take the time to understand what you're trying to accomplish, what you need, what you want to put together, what you're trying to accomplish, and then designing your policy around that. Designing a policy that's best for you, not the agent. Like the first policy that my client unfortunately was talked into and set up for him. It's really, really frustrating. So just be careful what you're working with, and then consider the long-term benefits that you get with these policies too, the living benefits, where it gives you choice, control, options when things do go wrong. And we can get access to a large portion of that death benefit and use the money for whatever we want, for whatever care we decide to get, alternative treatment, maybe, whatever traditional health insurance won't cover. So I hope this was helpful, guys. If you have any questions, drop some comments down below. I'd love to hear your feedback as well. If you'd like to have a conversation about this, whether it's infinite banking or just setting up a convertible term life policy, just to get started, get something in place, I'll have a link down below to my calendar. You can book a call with myself or my team. We're happy to have that discussion with you and just figure out what is going to be best for you right now based on your current situation. Just start the conversation, guys. Get the ball rolling, all right? So either way, I hope you guys are doing great. I hope this was helpful, and I wish you the best to your success. Matty Ice is out. Talk to you in the next one.